Hi, good morning, everyone. We're just going to give it a few more seconds here and let a few others join before we get started. All right, good morning. Let's go ahead and get started. Um, a few things that I just wanted to mention is that your cameras and microphones are muted and turned off. So if you have any questions, we're going to use the chat today. So go ahead and put those in the chat, and then we'll get to them just as soon as possible. Okay. I'm going to go ahead and get started here and share my screen. Welcome everybody to Trevisa Financial. My name is Monique Manaya. I am the sales support manager here at Trevisa Financial. I've been in the mortgage industry since 1997 from broker, retail, wholesale. I've been a processor, loan officer, branch manager, but most recently I was the EEP production manager over at the government entity that we're going to talk about today for our EEP product. And I led all of operations and bring to you guys a lot of knowledge and information to help you guys really succeed and build your EEP business. We also have Norma Summers. She is your account executive. She as well has been in the mortgage industry for quite a while in underwriting, mortgage insurance, and sales. So I believe with her and I together, we can definitely, help move your files along, help you with any questions you need, concerns you need, trainings you may need. So definitely here to help support you guys. So why Trevisa? I believe that Trevisa serves first-time home buyers like no other. And we are about creating generational wealth through homeownership. And so transforming families and their lives through homeownership and doing it with our innovative loan programs is definitely something that we are all about. And today we're going to talk about the Earned Equity Program. So the special case of earned equity and how it works is we have a government entity that is a Native American tribe out in Porterville, California, okay, by the name of Tule River. So you have a home buyer that just doesn't qualify for traditional financing. They just don't fit into that box. So what we're going to do is we have flexible guidelines here for your home buyers. And then we have Tule River who's going to step in and purchase the home on behalf of your home buyer. And at closing, they're going to sign a homeownership agreement. This homeownership agreement is recorded on title, so it gives your home buyer the secured interest in the property, and it allows them to get into a home now with all of the benefits of homeownership while they're, fixing maybe their income, credit, their citizenship type, so that they can in the future qualify for homeownership. So this is a path to full homeownership for them, but we want to make sure that we are pre-qualifying them through a TBD file, that we get a pre-approval from the entity, and then they go out shopping for this home, and the assignment addendum is what is then transferred over to Tule River to then purchase the home on behalf of the home buyer. So we have a few players in this EEP transaction. We have at first your home buyer is going to enter into a purchase contract with the seller. And then there's going to be the assignment addendum that is signed. As soon as that assignment addendum is signed, the players shift a little bit. We then have the government entity that is going to step in and have the relationship with the home seller by obtaining an FHA loan to pay them. And then simultaneously, or the day after closing-ish, they are going to enter into the homeownership agreement with the buyer. So one thing that's great about EEP is it is really truly protecting your home buyer's rights. Their right to the equity, they get all of the equity. There's no split. They get the tax benefits. So they will receive a 1098 interest statement at the end of the year so that they can write off all of the interest that they have been paying. A few of the EEP program highlights is 3.5% down for I-10, non-permanent resident aliens, and DACA, including U.S. citizens. U.S. citizens can take advantage of EEP program as well. We have low and no credit scores, 3-month bank statement to qualify income, self-employed W-2 and 1099 with a DTI of 50 over 60. Okay, so let me give you an example of the W-2 bank statement program. We had a borrower that had a full-time job, had their wages direct deposited into their bank account, but at nights and weekends had a part-time self-employed job, so they had all of those deposits. What we needed to do was we could see the direct deposits from their full-time current employment. And then we indicated all the deposits that were related for their second job, which was their self-employed job. And we were able to add up all of those deposits and use that income to qualify. We also have no source or seasoning on funds to close. So if you have a home buyer that just doesn't have the warm and fuzzies about the banking institutions and they save all of their money at home, that is perfectly fine. Also with bankruptcies, they can be in a bankruptcy. They just need to be discharged 1 day prior to closing and it needs to be reporting on credit. Also foreclosures is 1 year out. They still must meet all of the other credit requirements. And then for property types, we follow FHA for property types. Because the government entity is taking out an FHA loan, we need to make sure that we follow FHA guidelines for the property. So 1 to 2 units, PUDs, condos, manufactured homes are all okay. Also, sellers can contribute up to 6% of the sales price. Okay, so this is huge to help bring down your borrower's bottom line. We want to try to, have the seller pay enough to meet MRI, which is the minimum required investment, 3.5% down minus the earnest money. I do want to make note, and it's very important to know and understand that the seller contributions cannot go towards the entity's fees. So I'll go over those entities' fees in just 1 second. For our bank statement program, we have a tiered expense ratio. So our standard expense factor is 45%, but we do understand that depending on your borrower's business, either their service or product related, how many employees they have, we have the tiered option to where they can get the expense factor all the way down to a possible 10%. So if you're looking at qualifying your home buyer and you're just thinking, wow, 45% is very high. They don't have to buy any products. They really don't have much overhead. They have no employees. So with a CPA letter, we can look at getting that expense factor all the way down to 10% to help better qualify your home buyer. So when you are looking at home buyers to qualify for EEP, you're really looking at, buyers that don't qualify for the traditional financing for I-10 and DACA. And then for doc types, we only require 12 months employment history with the prior year W-2, 1 month pay stubs, written VOE. We can utilize overtime and bonuses in less than 2 years history. 3 months bank statements. We have the P&L only product. with only a 580 minimum credit score. And this 580 credit score, it doesn't have to be a tri-merge. As long as you just pull one credit score that it is above 580, then we can take your EEP file. We also only need one trade line. So for our no score program, we only need one trade line. And obviously, if there isn't any pulling on credit report, we can use alt trade lines as well. Okay. So let's see, verification of rent. We do need a 12-month history. If for some reason your home buyer is not paying rent, maybe they live with family, we can do that. It just requires a letter from, you know, the home buyer, maybe even the family, and I believe it's 2 months reserves for that. For the documentation of assets, it's 2 months bank statements. Gift funds are allowed, and also, again, no source of or seasoning of funds to close. We also only need to verify MRI in the home buyer's bank account. So as long as we're verifying MRI is in there, we can provide a letter of explanation as to where the rest of the funds are coming from. You know, most people just are saving the money at home. And what else was I going to tell you guys about that? Sorry, I don't remember what I was going to tell you all about that. But if I remember, I'll let you know. So qualifying the property. So it's a little more unique than FHA. So we're still going to obtain the full FHA appraisal. And if it's subject to repairs, we're going to need to get the 1004D. The government entity has an overlay. They require the pest or the termite in 35 states. Okay, so keep in mind that you might want to get that going ahead of time. And then also, a home inspection is required if the property was built in 1978 or older, and or if your appraisal comes back with a condition of C4 or greater. Okay, and if a home inspection is required, then a certified home warranty is also required, and that certified home warranty has to have roof coverage. Here are the funds to close for an EEP transaction. So what we're going to do is we're going to take your down payment and FHA closing costs, essentially the bottom line from the final CD, okay? And that amount is going to move over to the government entity's form called an ICCD, which is an initial consumer cost disclosure. They're going to take that bottom line, they're going to add in the first month's payment, which is Tule River's 30-year fixed total payment plus the servicing fee. This servicing fee is necessary for your home buyer for after closing. This is where they will go to have any questions, concerns. They'll get a mortgage statement every year. Again, that 1098 interest statement. And then the other related entity fees is $12.50. Sorry, $12.50. $12.50 underwriting and processing fee, $150 notary fee, a 0.5% a homeownership agreement fee. If the property is in a PUD or an HOA, then there's a $250 fee for that. Okay. So they will take the bottom line from the CD, first month's payment, and their entity fees, add those all up, and that will be your home buyer's funds to close. Okay. But just please remember, please keep in mind that all seller credits can only go towards fees that are on the FHA CD. Seller cannot contribute towards any of these other fees on the right-hand side, the first month's payment or the entity fees, although gifts can go towards these fees. Okay. Okay, so we're going to talk about the structure of the homeownership agreement. The homeownership agreement is a 40-year contract. Okay, it's a 40-year homeownership agreement. The reason for this is because the government entity only charges a 0.5% up front. and they do not share or split the equity. And the only way that they're able to really collect revenue and do this is have more of a pay-as-you-go model, okay, versus taking appreciation later, okay? So the home buyer pays the government entity's 30-year FHA payment with the servicing fee. That is their monthly payment. But the payment from the client is spread over 40 years on the homeownership agreement. Okay, so this creates a fixed differential, and the differential is booked as an asset for the tribe. Okay, so by doing this, by doing it this way, the home buyer can keep 100% appreciation of the home. And it is also a flexible contract to where they can make extra principal if they would like. Okay, so the slower initial principal reduction versus the FHA loan makes it designed as an appreciation focused homeownership path. The bottom line, this balances tribal financial objectives with home buyer wealth building, and it's a strong alternative for buyers unable to qualify for FHA. Okay, so that is why they're making the government entity's 30-year mortgage payment with the servicing, but the contract is over 40 years. By structuring it this way, the home buyer gets to keep 100% of the appreciation when they exit the loan. So EEP is essentially designed for the home buyer to eventually acquire the home in their own name. Okay. Few ways they can do this is they can assume the government entity's FHA loan once they can get, whatever they need to in order to qualify for this traditional financing. And then 6 months later, you could always streamline them to a lower rate if those are available. Or they could even just sell the home and retain all of the equity and either buy another home EEP if they still don't qualify, or they have, a lot more money down that they can put down on a home, maybe going conventional or non-QM. So it's really securing the client's rights, though, by having the memorandum or the homeownership agreement recorded with the county, because this isn't just an individual that's entering into a purchase with or a seller option with to purchase, seller option to purchase. Sorry, those haven't been around since early 2000. So seller option to purchase, typically home buyers were very limited on sellers that were willing to do this. So they couldn't go out and pick the home of their dreams. And when they entered into this contract, there was nothing recorded on title, and they were making their payments to an individual. We don't know, this individual could be pocketing the payments and letting the home go into foreclosure. I'm pretty sure that they weren't applying any of the payments towards, the balance of the home price going down. So utilizing EEP is such an amazing program to help these home buyers get into the home and have feel secure doing it. I do want to mention a few process flow information. So we want to make sure that we're having a really smooth flow, a smooth transaction, a smooth submission. So we want to make sure that we're uploading cover letters that are letting us know of the situation of maybe the credit, how you structured the income, what assets are being used. Are you submitting bank statements with zero assets? Let's put in a cover letter to the underwriter that currently they're saving all their money at home and that they'll deposit it later. Or they're going to be getting a gift letter, they're getting gift funds. Making sure your 1003 is completely filled out, because the pre-processors over at the government entity will send the file back to us if it's incomplete. So we want to make sure there's no holdup on that end. Letter of explanations on the current home disposition. So do they have a home that they're selling and that's where their funds to close are coming from? Or do they have a home that they're going to retain? Things that need to be known, because if they're going to retain a home, then There's some additional guidelines. The home buyer then needs to have 3 months reserves, and they're capped at a DTI of 40 over 50. Okay. Including your income calculation worksheets with what expense factor you're wanting to use, having the CPA letter if you're wanting to use a lower expense factor. All really important things that can just make your submission and your pre-approval go a lot smoother. I do also want to go over a little bit about the workflow process, but mainly setting the proper expectations. Okay, this is not traditional mortgage. Yeah, I used to close some loans in 14 days and then close and fund same day. This will not happen with EEP, unfortunately. And I will tell you that your first maybe 1 to 3 files are going to be a little bumpy because you're still learning the program. You're still learning the flow of the program. I have loan officers now that can close them in 21 to 25 days. So please trust me, you'll get there. But there's 2 files running simultaneously. You're going to have your homebuyer TBD file. You're going to have your Tule River subject property file. We're working on 2 conditions here, a set of conditions from the government entity and a set of conditions from Trevisa. Luckily, the set of conditions from Trevisa are only property related because the government entity does not have to income, credit, or asset qualify. But we're working 2 conditions. We need to obtain 2 CTCs. We have to obtain the government entity CTC first, then we can get ours and move to closing. We're also looking at properties. Properties that are requiring home inspections may need repairs. Typically, the government entity will only require repairs on major safety issues. They do have cure agreements, 3 or 6 month cure agreements that they will possibly put some repairs on. That way we can move to closing. But just be aware that, the property could create some delays, making sure that this is all communicated with your buyers and also your real estate agents. We want to make sure that the communication is open and flowing throughout the entire process. I know that one of the major things that always would make anybody angry is if they just weren't being informed and communicated to. The closing. So like I mentioned a second ago, these will not close and fund the same day. Okay. We have a government entity that is a Native American tribe. They're sitting out on their reservation out in Porterville, California. They are an hour away from a drop box for UPS and FedEx that picks up at 4 p.m. So they have to leave by 2:45 to get packages out in order to go out that same day for next day retrieval. If we don't have packages to them by, I believe their cutoff is about 1 p.m. to sign and send out for same day, there could be definitely a delay in that aspect to where the package isn't able to go out until the next day, and so then the originals won't be received until the day after that. These are situations that have happened and that may happen. Wire transfers. Your home buyer is going to wire in all of the funds to close to Tule River. Tule River, once they receive it, will then wire the funds to the bottom line to Tule River while retaining their fees and the first month's payment. Wires can take time. Wires can get lost. Making sure proper expectations are communicated and explained is so very, very important. This is a unique program with a lot of moving parts. This is a program that is getting those people into homes that otherwise wouldn't be able to. So we need to make sure that we have, that communication and also the patience, knowing that we are all doing what we can to make it happen. But we just need to understand that it is a unique program. A few things that are very critical for a successful EEP file is the pre-approval checklist. When you are submitting your homebuyer TBD file, you need to make sure that this checklist is completed, especially at the bottom. There is a referral information for your home buyer, somebody that is a friend, relative. I've even had somebody use their manager from work, but this information needs to be completed and uploaded with your home buyer docs. This form lets you know what we need, so there isn't any delay, but when we're uploading your file to the entity's portal, we do get a hard stop for that referral name. So that is one of the biggest reasons why we need this form and the name at the bottom, okay? Make sure you're checking FHA County loan limits because Tule River's taking out an FHA loan. We have to meet FHA County loan limits. Again, if the borrower is retaining an existing property, they're subject to a lower DTI and 3 months reserves. The assignment addendum, guys, making sure that this assignment addendum is signed, fully executed by everybody before we start file number 2, okay? All it does is if you don't have it signed, we've triggered a loan, we have 3 days, and it's going to cause delays. Lender paid versus borrower paid pricing. If you disclose borrower paid, you have to lock it borrower paid. We cannot switch that in between. So making sure you know how it was disclosed, you'll be filling out your mortgage broker fee agreement at the beginning and uploading that. And that's how the way we're going to disclose. If you need to refer back to it or ask your account manager how it was disclosed when you're about to lock, that way we are all on the same page, okay? Just keeping in mind that if you are going to do the tiered expense ratio, it does require a CPA letter. Seller credits cannot cover the entity fees. We only allow FHA approved condos, so making sure that those condos are approved before you go, far into the loan is a great idea. Hazard insurance. If you're going to procure hazard insurance outside of the entity, then just realize that you could be looking up to anywhere from a week to 3 weeks to get that approved. They have a list of about 10 requirements with 3 different forms. Needs to be signed by you, the home buyer, and the insurance agent. I've seen these go very far out for about 3 weeks and finally discovered that the insurance agent cannot sign this form. And then we ended up needing to rush a request through the entity. The entity can provide homeowners insurance, okay? The title company being approved. We don't necessarily need the title company to be approved. The escrow officer doesn't need to be approved. The attorney doesn't need to be approved. Whoever is providing the title, the insurance for the title. So the company that's providing insurance for the title is who needs to be approved. We have First American Title, Westcor, Ticor, Landmark. We have a lot of, good companies on this list. If you do want your title company approved and they're not on the list, we can do that. It can take some time because the board of directors over at the tribe only meets every third Tuesday of every month. So if they had just met and you're wanting to get someone approved, that can take time. And then termite inspections. Again, there's an overlay in 35 states. And then the property inspection again, if the property inspection is required, then we also need a home warranty with roof coverage, okay? Make sure you guys are writing down any questions you have, put them in the chat as I go along, because we're gonna get to that in just a few more slides. Specifically for I-10, this program is extremely popular for the I-10 market out there. And we just want to show you a little bit of how competitive Trevisa is with our earned equity program. We have the 3.5% minimum down with 3-month bank statements, 50 over 60 DTI, and a 580 credit score with 1 major bureau. So comparing to the others where it's 15 to 20% down, 12 to 24-month bank statements, 43% DTIs, and 700 plus credit scores. Our EEP program is very unique and is going to help those home buyers that do deserve homeownership. We have our support center, so you can either call or we have an EEP question mailbox. These go directly to me. So if you have any questions, I am on trainings a lot. Please know that you can send an email, and I do respond to emails in the same day. So you can either email the EEP questions at Trevisa, or my personal email is mmanaya@trevisafinancial.com. This phone also goes directly to me. I do these trainings quite often. So if for some reason I'm not answering, I'm probably in a training, shoot me an email. I can get back on emails very quickly. We have our resources for you here at Trevisa. So not only do we have those EEP hotlines, we do our weekly trainings, and we'll do the Q&As after that we're going to be doing here in a second. You can also set up your own private training if you have ops that you want to go through our TPO Connect process flow training. This is a great training for processors, even for yourself as a loan officer, just to learn about more of the process flow and how things work. I also do a demonstration on how to register your file and how to complete one of the our closing cost worksheet. So this is a worksheet that goes through all of the fees, the breakdown of the payment, something that will help you present the detailed information to your home buyer, okay? We can provide flyers that have your name and logo to market this EEP program. And so we're here for you, myself and Norma. Any questions you need, additional training, marketing, we definitely want to help be here, help support you and be here for you. So now it is time for our Q&A. If any of you guys have any questions today, we would love to answer those for you. Again, please use the chat. The mics are disabled today, and so you'll just need to enter into the chat if you have any questions.
Yes, Monique, and while they're, formulating or typing in their questions, if they have any, I just want to reiterate to everyone, this program is really a really great program for these home buyers that otherwise, would not qualify for a traditional mortgage and have to wait year over year to finally get their credit, their income, their DTI, their FICO, their immigration status in place so that they can finally one day qualify to get into a home. And as we know, 40 years is now the average age of first-time home buyer. So there's a lot of time that they are missing out to start building on that generational wealth, that nest egg for the future. And this program is an option for them to do that. So it kind of reverses the process where they can get into a home and then continue to work on getting their credit or immigration status or their credit, FICO, DTI, all that in place, still work with you guys so that they can eventually get into a traditional mortgage. So we're really excited that we have this program available to you guys. So keep that in mind. And again, reach out to Monique and I, but if you have any questions, Monique, that you want to start, answering.
Yeah, we have a few questions. So if you have a home buyer that is under a 580 score, that is an exception. So they will look at these. It's kind of the same as any other where you need to have some compensating factors, which would consist of reserves, time on job. What would be some others if the credit score is low? Sorry, I'm drawing a blank. It's reserves, time on job. Even like a 24-month VOR instead of just a 12-month. So things of that nature to help strengthen the file in their eyes if you're below a 580 are definitely things. What we would want to do is we'd want to submit your homebuyer TBD file to them and, provide as much strength as we can to get that approved. Okay. And no, currently down payment assistance is not allowed for this program. The 3.5% does have to come from your home buyer, or it can be a gift. Okay. Yes, we can do no score, non-traditional credit. So if your home buyer does not have a credit score, they just need one non-traditional credit, and that is in addition to the verification of rent. Okay, you cannot use your VOR as a trade line. This servicing fee is paid for life of the loan. So, we want to remember that this loan is more of a pathway to full homeownership. So we're going to try to work with our clients to get them whatever they need to get in order to then either have them assume the government entity's FHA loan, and then you guys can streamline them, or they can sell the home, gain all the equity, and then buy another home. You can help them with that. So keeping in contact with them and building, a client for life is definitely important on this program. Where do they find our rates? You can find the rates in TPO Connect, but also Norma, if you're signed up with us, you should be getting those on a daily basis, but Norma can help assist you with those. I had another question at the very beginning. Go ahead.
Just one more thing. If you're on Loan Sifter, you can find us there too.
If I had a question about clarifying the 40-year part, as they joined a little late. So I've had this slide up to kind of help explain it. So the government entity only charges 0.5% up front, and they give you all of the equity. So the way that they've developed in order for them to get really paid and making it a benefit for not only them, but also a benefit for your home buyers, is they've structured the homeownership agreement to be over a 40-year term. Your home buyer is still going to make the government entity's 30-year fixed payment with that servicing fee. Okay. But as your home buyer is paying, it's more of a slower principal reduction than the government entity's 30-year fixed. So when they go to pay off, there's going to be a differential there. All right. That's how the government entity is mainly going to make the money. But that allows them to give all of the appreciation to the home buyer. Perfect. Did that explain it? Does anybody else have any questions? Okay, perfect. Good. I'm glad. You're welcome. And you guys, we have, I'm not sure what companies you guys are all from, but we have this slide presentation that we can send you. You can modify it and add your name, your company logo. Unless you're with CMG, that's done internally with them. But this is something that if you want us to send you so that you can go out and start marketing this program, just let us know. You can send myself and Norma an email, and we can get the slide presentation over to you guys.
And one more thing, guys, we do have, once you have your loan, you will want to know how to submit it. We do have a TPO Connect. We have TPO Connect trainings every week on our. You can find the link on our website, trevisafinancial.com, under events, or under our signature, email signature. But we have one coming up today at 1 o'clock. So if any of you want to get a jump start or review again your TPO Connect access and how to submit these loans, please keep that in mind and register for the call at 1 o'clock Pacific Standard Time. Thanks, Monique.
Sounds great. Yeah, thank you, Norma. Thank you, everybody, for joining.
Thanks, everyone.
Bye-bye.